Okay, so we're going to talk about volume. Volume, I know I say this every single section we've done so far, but volume is they're all so important. These all matter. They all have to matter. They're all so important. And I would say probably equally important. They all have to matter because they all have to coexist for it to work. So with volume, there's a couple things about volume. And what volume really is how much liquidity is in the markets at that given time. How many people are trading during that given time, which is causing volatility in the markets, which is markets moving fast. Okay. The simple way to put it is volume is how fast is the markets moving. How fast are the markets moving? So we need volume to be successful. When there's no volume, we get stopped out a lot. And it's unfortunate, but it is the truth. We get stopped out a lot if there's no volume. If price breaks out and slowly starts to consolidate, more than likely, price is going to lose. Now, I will show you guys a couple examples of this. It's very simple. But for example, if we were to, we'll call this a good example here, right? If we were to look at this trend line right here, as well as this support right here as well. Boom. Put this into full replay mode to show you guys. Okay, so the trend line break looks good. Overall, price has now become bearish because we are now in a bearish market structure, as you can see. Why are we in a bearish market structure? Well, I'll touch base on that with you guys really quick. We have the higher high, higher low, higher high. Boom. We snapped right past that previous higher low. And as you can see, we broke below a support. So it's a decent selling position, not the greatest because we don't have a lot of market structure saying we're going down, but we did break that trend line and we broke the support line. So if we were to take our short position here, nice tight stop loss above that support position once again, and we just go for our 1 to 3 to 1 to 5. This is what happens when there's no volume, and because I'm trading at 17:30, which is way out of the session, this is not New York session by any means, we're going to see this. That's already not good. Not good at all. Okay, as you guys can see, price is not moving down. It's moving sideways, which means we're moving left to right and creating consolidation. As you can see, boom. Why are we doing this? Because we have no volume. We have no pressure. There's not enough people trading. The market makers are not moving the market or dumping liquidity right now, so price is not going down or up. We need price to go down. And all of the signs are pointing towards a market that moves down. But once we have consolidation and prices moving left to right, it doesn't matter anymore. There's no such thing as we're going to push down because that's what should happen. We're consolidating. It resets the entire market. The entire market now just reset because of what? Volume. There's not enough volume distribution. We are not trading at a high level. We trade with no volume. We have got to make better decisions to trade this. You see this right here? No volume, doesn't look good. We're out of this trade. Yes, we're negative right now, but we would rather lose this small amount right here, which would be about 7 points, than let it go all the way up and take us out for 15 points, more than double that. Just take your loss. Cut it off early. Now, if you cut this off early and it continues to push down to your target, don't sit there and beat yourself up. Don't say, oh my gosh, if I would have just held this horrible position, I could have made money. There's no reason to do that to yourself. Why are you going to look at past data that you can't change and let that reflect who you are as a trader now and what you're going to do next? It's over with. So once you close this trade as we're moving sideways, you walk away. You don't even care if this thing comes up and ends up hitting stop loss. You don't even care if you made the wrong decision, right? People will call it a wrong decision because it worked out. Look at that. It didn't work out. And even if it did work out, it is so ugly you would have gotten lucky if it worked out. We don't trade based off of luck. We don't trade and hope for a lucky situation. We make smart decisions, okay? We make very smart decisions, calculated decisions, and we do things the right way. We don't rush these trades. We don't overtrade. We don't trade no volume markets. We don't do these things. If there's no volume, we don't trade. Now, I want to show you guys an example of good volume. Okay, this is good volume, right? Now, if I go over to an example which was at 6:30, you're going to see a very nice difference here. Okay. Very nice difference. Okay. So this is 6:30 a.m., which means guess what time it is? New York session. And guess what we have? So many confluences, right? Look at this trend line. We are trending to the upside. That is beautiful. We have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We're trending to the upside. This is a bullish market. We want to go long. We want buying positions. But we have to wait till session starts, which is right now in the next 5 minutes. Check this out. We have resistance. We have a bullish market structure. And we have what could be a break. So all we need now is that volume. Let's take our long position as we break right there. Boom. We're going to break. We have a nice tight stop loss. We go for our 1 to 5, 1 to 4, whatever we want to go for. Typically 1 to 3 to 1 to 5 is that sweet zone. So we'll go 1 to 3.5. That's perfect. That covers a lot of losses. If we do take 3 losses, we're still profitable with 1 win. But again, this is a very nice setup. And guess what? It's at 6:30 a.m., which means we should have good volume because we're trading during New York session as our strategy tells us to. Look at this. Boom. That is a good volume. We're not going left to right. We are going straight up like price is supposed to. Beautiful. 1 to 3.5 hit. Super simple. Why? Because we had volume. Why did we have volume? Because we traded during New York session like we're supposed to. We're not trading outside of our session. If you guys want to be successful, you're going to have to listen to me and you're going to have to understand you have to let all of these rules apply every single day and stick to them. What does that mean? That means discipline. Have you ever heard of that word, discipline? You have to be disciplined with yourself. If there's no volume, if market structure doesn't look like this, you don't trade. Can you imagine a day where you look at the charts and you don't trade? Has that ever happened for you? Well, it needs to start happening. If you want to be successful, you're going to have to grow up and learn that not every day is a trading day. You may miss 3 days in a row because the markets aren't good. You better get another job because that's just life. You want to be profitable? You have to listen to me. You have to be consistent. You have to be disciplined. You have to wait for volume during your session. Okay, the good news is we don't just trade NQ. We also trade YM. So if you're trading YM and NQ minis, you have 2 options because sometimes NQ is slow. Look at YM. Sometimes YM is slow. Look at NQ. You have 2 options. Look at them both. What looks the best? Trade that pair, that future. Understand that, okay? So if there's no volume, there's no trading, my friends. Understand that right off the jump, and you will be okay. Discipline, consistency, it leads to success, okay? Now, another little version I want to show you guys. We'll go to another day. And just to show you guys, right? So we have, this one's decent because we have a lot of volume come in, but it switches very fast. So if we go to our 15 and look at it, we can do multi-frames here. I might have lost it there. Let me see. We'll go, is it right here? Is an okay position. I need to find where we just were though. I don't want to cherry pick too much. Right there. There it is. So we put this into replay mode, right? This is 6:30. This is session, and we see there's a lot of volume because we are moving. Okay, there's a lot of volume. So we like that there's volume. We like that we're moving. We like that we're what? In a bullish pattern, right? Bullish market structure. We have what could be resistance here, and we wait. Didn't happen. It dropped. Okay, let's wait for market structure to be bearish. If we're going to look for sells, it's still at that support. Until it breaks that support, we're not bearish, right? Because we have the higher high, higher low, but we've created support. We have to break this support for it to be bearish and to look for sells. Otherwise, we're going to wait till price comes back up and look for buys. Now look at this. Price is moving okay, but it is a little bit sideways. Not the best volume like the examples we just saw, but it is there. It's there, right? And if we were to draw this trend line all the way out, it's a nice little trend break. It's an okay position. But because I don't feel the most confidence in this setup, what am I going to do? The volume's okay. The setup looks good, but not great. I'm going to risk less, okay? Not stop loss. I'm not going to make a tighter stop loss, but instead my contract size is going to get smaller. Now, if you guys want more information on contract sizes and the actual act of hitting buy, sell, short, long, all of that good stuff on legacy funded futures, which is the only platform that you guys can literally trust, I have my team creating that for you. There will be a link somewhere after this video, around this video. I don't know where yet. We're having a lot of troubles getting this course up. It has been nothing but a nightmare to get this for you guys. They do not want this out. But I'm going to have Luca talk all about contract sizes and all of that good stuff for you guys. And he'll go over that for you. I'll have a link somewhere for that. But again, we're going to lower our contract size. We're not going to trade as much. We're not going to risk as much on this trade because the confidence level is not as high. And as you can see, we lost. We instantly lost. Okay? That's okay. That's okay to instantly lose. It's okay to lose. I'm going to explain why right now. Because after a loss, we can re-enter. So yes, let me put that, I'm going to rewind that, sorry. So yes, we did lose. But you know what? It's not the end of the world. Volume looks pretty decent. We now have a pretty decent support line to go off of. Okay, guess what? We can look for a re-entry. So what we'll do is we'll take a short position if we re-break. Maybe we'll have a little tighter stop loss. We'll risk the same amount. We'll go for a 1 to 3 once more. And we'll see what happens. Guys, you never know. You never know in this industry. Okay, you never know. But at the end of the day, as price starts to push here, boom. We made our money because we were patient. I think we went for a 1 to 3.5. Maybe it was. I don't know. Either way, we can go 1 to 3.5. We can just go 1 to 3. But either way, we were patient. We knew we had volume, which is very important. And all of our rules still applied. We're only taking up to 2 trades max per day. Sometimes 3 if we really feel good about that re-entry. But re-entry is important when we trade. Very important. Just because we lost does not mean we give up. If a support line breaks again, we're going to enter again. Because guess what? Let's say we did a small contract size and this loss right here on our legacy funded account was $1,000, right? We lost $1,000 here. We re-entered. We went for a 1, 2, 3. $3,000 is what that trade is worth now. Meaning overall in those 2 trades, we made $2,000 net profit just off those 2 trades because we re-entered. Why did we re-enter? Because we had a lot of volume and all of our other rules applied. So using all of these rules and combining them together is very important, but it's very important that you guys understand you can take more than 1 trade. Don't be afraid. But no more than 2 unless that 3rd trade is so perfect. Volume is looking so amazing. Everything's perfect. But if you do lose that trade, remember, you're going to need 1 win at a 1 to 3 to bring you back from those losses. And you cannot get aggressive. You cannot vengeance trade and revenge trade. You can't do that. You have to stick to your rules. So don't take 3 trades if you can't be disciplined with yourself after that. But this is how you trade, guys. This is how it's done. Volume, support, resistance, market structure, trend line. This is what is important. Beautiful, 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 man. And this is all during our session. We had 1 trade hit a 1 to 5 and 1 hit a loss and a 1 to 3. So overall, we're up $7,000 if we risk $1,000 per unit. Oh my gosh. Life is good. Life is great.